Good morning, everyone. My name is Arisha Chakravarti from Stuyvesant High School in New York City. Today, I'm going to present an in-depth analysis of Barrick Gold and why it stands as a strong investment opportunity in the current economic landscape. Okay, so Barrick Gold is one of the largest and most established gold mining companies globally, with the ticker symbol GOLD. It operates in 13 countries and is a significant player in the gold and copper markets. I'm presenting a buy recommendation for Barrick Gold with a target price of $32.17, which is a 71% increase from the $19.40 as of March 31st, 2025. In this presentation, I'll walk you through the fundamental factors driving Barrick's gold, its strong correlation to gold prices, its resilience in overcoming operational challenges, and the positive future outlook based on gold price forecasts. Let's take a closer look at why Barrick is well positioned to thrive moving forward. Because gold has always been regarded as a safe haven, and this remains true today, especially when we consider the current macroeconomic landscape. So first, let's discuss gold as an inflation hedge. Historically, gold has performed well during periods of high inflation, preserving purchasing power when fiat currencies lose value. With U.S. inflation still above target, demand for gold as a safe asset has risen. Similarly, during economic downturns, gold prices tend to rise as investors move away from riskier assets like stocks and seek safer investments. Concerns about potential global economic slowdown, especially due to tightening monetary policies, gold's appeal is growing. Geopolitical instability also boosts gold's attractiveness. Tensions like those in Ukraine and the Israel-Palestine conflict, among others, make gold preferred choice for investors looking to shield their portfolios. So, the current environment of rising inflation, recession fears, and geopolitical tensions make gold, and Barrick Gold by extension, an attractive investment opportunity. So, the momentum behind gold is poised to continue, and several factors are driving this trend. Interest rate uncertainty is a key driver for gold prices. When central banks pause or cut rates, gold becomes more attractive, as lower rates reduce the opportunity cost of holding non-yielding gold. Additionally, a weakening US dollar makes gold cheaper for international buyers, increasing demand. The US dollar index shows signs of decline, which could further boost gold's value. Institutional interest, particularly from hedge funds and central banks, is rising, with central banks adding 1,136 tons of gold in 2023, the highest since 1967. Combined with supply constraints, these factors suggest gold's momentum will continue, making Barrick Gold a solid investment. So the Bank of America predicts gold prices could reach $3,500 per ounce by 2025. Potential Federal Reserve rate cuts and a weakening US dollar would boost demand for gold as a safe haven asset. Lower interest rates and a weaker dollar make gold more attractive internationally, further increasing demand. Central banks, which added 1,136 tons of gold in 2023, are a major source of institutional demand. Additionally, supply constraints, with limited new discoveries and declining mine production, could push prices higher. These factors support a strong growth outlook for Barrick Gold. So historically, Barrick Gold has shown a strong correlation in gold prices. In the past, this relationship has been clear, as Barrick's performance closely mirrors the fluctuations of gold prices. In fact, the correlation between Barrick's stock price and gold prices has often been as high as 0.72, as you can see in the graph over here, indicating a strong positive relationship. However, in 2024, this correlation was less apparent. Barrick faced several operational challenges, which temporarily affected its ability to track gold price movements as closely as before. These issues included problems with mining contracts and disruptions due to government regulations. That said, Barrick has been actively addressing and resolving these structural issues. The company has already rebounded from these setbacks and has recently reported a significant increase in its mining reserves. This is a key factor in positioning Barrick to return to its strong historical correlation with gold prices. As Barrick overcomes these hurdles, we expect stocks to align more closely with the upward trajectory of gold prices, leading to potential upside for investors. This company's efforts to stabilize operations and expand its reserves will likely result in stronger performance moving forward, making Barrick a solid investment as gold prices continue to rise. So Barrick Gold is one of the largest gold producers globally, operating in 13 countries with a diversified portfolio of gold and copper assets, reducing reliance on a single commodity. Key mines like Nevada Gold Mines and Kibali are among the most cost-efficient, helping Barrick maintain a competitive edge. With an all-in sustaining cost (AISC) of around $1,200 per ounce, Barrick stays profitable even during low gold prices. This operational efficiency, along with scale and diversification, positions Barrick well to capitalize off rising gold prices, making it a solid long-term investment. So in 2023, Barrick Gold achieved $11.5 billion in revenue, driven by higher gold prices and steady production. This growth highlights the company's ability to thrive in favorable market conditions while maintaining production stability. Barrick also maintained a 40% gross margin, reflecting effective cost management and operational efficiency. With strong free cash flow of $1.5 billion in 2023, Barrick supports dividends and debt reduction, and reinforcing its commitment to shareholder value. These results underscore Barrick's strong profitability and position as a leading gold mining company. So when comparing Barrick Gold to its competitors, one of the key advantages that Barrick holds is its lower all-in sustaining cost, AISC, which is among the lowest in the industry. This cost efficiency translates into higher profitability margins compared to its peers, giving Barrick a significant edge in terms of operational efficiency. So in terms of market capitalization, Barrick competes closely with Newmont. Despite this close competition, Barrick's superior cost control allows it to remain competitive, even with slightly lower market cap, by ensuring greater profitability per ounce of gold produced. Also, Barrick's return on equity, ROE, of approximately 7% also outperforms many of its closest competitors in the gold mining space. This is a clear indicator of Barrick's ability to generate value for its shareholders. These comparisons show that Barrick's disciplined cost management and efficient use of resources help position the company as a leader in the sector, with strong financial performance relative to its competitors. So Barrick Gold's earnings are expected to rise as gold prices continue to climb, as we've established earlier, with a potential PE ratio expansion reflecting increased investor confidence. Bank of America's forecast of gold prices reaching $3,500 per ounce supports this outlook, which would boost Barrick's revenue, given its significant exposure to gold production. Despite setbacks in 2023, including a dispute over mining regulations, Barrick has resolved these issues and reported a 23% increase in mining reserves, positioning the company for long-term growth. Additionally, Barrick's current PE ratio of around 15 is below its historical average and peers, indicating the stock is undervalued with significant upside potential. Overall, Barrick's strong fundamentals and the expected rise in gold prices make it a compelling investment. So Barrick Gold is committed to reducing its environmental footprint by adopting sustainable mining practices, focusing on carbon emissions, reduction, water management, and minimizing environmental impact. The company is also investing in renewable energy sources to align with global sustainability trends. So on the social side, Barrick works with local communities to provide economic benefits and support development initiatives. However, it has faced criticism over labor conditions and the treatment of indigenous rights, particularly in regions where indigenous communities live. Government-wise, Barrick has strengthened its transparency and regulatory compliance, improving its oversight and the adherence to regulations, which helps mitigate risks and maintain investor confidence. So, the potential use of AI in the mining industry presents significant opportunities and risks for Barrick Gold. AI can optimize operations by improving safety, predicting hazards, and enhancing efficiency through predictive maintenance, reducing downtime, and extending equipment lifespan. However, implementing AI comes with challenges, including high initial costs for hardware, software, and workforce training. So currently, Barrick is exploring AI, but full implementation is not yet realized. So, in summary, while AI implementation carries risks and costs, its long-term benefits in optimization, safety, and profitability could significantly drive Barrick's growth and efficiency. So, Barrick Gold presents a strong investment opportunity that comes with several risks, including geopolitical, supply chain, gold price, volatility, and regulatory challenges. So geopolitical risk is significant as Barrick operates in 13 countries. The supply chain constraints and declining gold reserves are also concerns because the depletion of high-quality reserves may lead to higher production costs and limit future growth. Gold price volatility is another risk as Barrick's performance is closely linked to gold prices, which are influenced by economic conditions like interest rates and currency strength. Regulatory risks are also present given Barrick's operations in multiple jurisdictions with differing tax policies and mining laws. So in conclusion, while Barrick is well positioned, its investors must carefully consider geopolitical instability, supply chain issues, gold price fluctuations, and regulatory changes when evaluating investment potential. So now, let's talk about Barrick's gold stock price target. We set target $33.17, which implies a 71% upside from the current price. This comes down from the Barrick's current PE ratio and the projected gold price ratio. Barrick has resolved key issues that were holding it back, like the disputes with the government, and they've also reported a 23% increase. Overall, it's a good thing to invest in. Thank you.